Good afternoon, everyone, and welcome to this second of three RECO and Ofgem prepayment meter levelisation updates. Today we'll be providing you with an update on the Ofgem policy and consultation development, an update on progression of the REC change proposal, and in drawing with emphasis on those elements that have changed since the previous version that was sent out under the change process. We'll also provide you with an update on the development of the scheme operation, and in particular, and important today, is a worked example of how the redistribution calculation will work. I'm now going to hand over to my colleague Jenny, who's going to talk us through housekeeping. Thank you.
Cool. I'm Jenny Stevenson. I'm the Marketing and Communications Manager at RECO. Just wanted to set a few meeting ground rules before we start. So you should have been entered in with your camera and microphone switched off. We just ask that you keep that off during the event. We have turned the chat function off for this meeting, so we please ask that you raise any questions using the Microsoft Q&A function instead. You can find that at the top. It should be right next to the chat icon. Please keep any questions on topic. Don't mention other organisations by name. Please remember that any questions may remain visible to others with dial-in access after the event. And lastly, this meeting is being recorded. If you're not happy with that, please leave now. The recording will be public, so it will be on our YouTube channel, and it will also be made available on our website. Just want to introduce you to our speakers as well. So you've already met Brian. He is our Director of Finance and Commercials at RECO. We have John, who's the Director of Development and Strategy at RECO. Jonathan from Ofgem, who's Principal Industry Operations and Commercial Expert. And Ursula Mulholland, who is Managing Consultant at Capgemini. So I will pass it over to Jonathan to talk through the things from Ofgem.
Thanks. Thanks for that, and thanks for coming along to this. As I said, I'm going to talk through the Ofgem position on reconciliation and levelisation policy. I work as the principal expert in the levelisation delivery team, so that's the team which looks at how we actually implement the reconciliation elements of levelisation. On the call as well, we do have some representatives from the policy team, so if you do have any questions on that, we should be able to give an answer from both sides. And if you'd like to go on to the next slide, please. So I'm going to be fairly brief in what I say today. I'm going to cover two things. Firstly, the levelisation policy, including reconciliation, is out for consultation at the moment. That consultation was published just over a week ago, with a closing date of the 2nd of January. And this covers everything from the impact assessment, the rationale for levelisation policy, the licence condition changes, the algebra changes in the price cap, through to some discussion around the rationale for and the powers in relation to reconciliation. I would like to say as well that we have got a price cap technical seminar on the 12th of December. The intended audience for that is the people in suppliers who will be working through the algebra of the price cap to apply the price cap. So if you do have people who would like to attend that, if you could email the email address which is on the screen, priceprotectionpolicy@ofgem.gov.uk, and let them know. As I say, that will be a technical session running through algebra, so we really want to make sure we get the right audience for that. But in general, any other comments on the consultation? As I say, closing date is 2nd of January, and we will be publishing a decision on that in early 2024. And obviously this runs alongside the RECO consultation on the reconciliation process under RO 147. Can you go on to the next slide, please? So I just wanted to talk through what the key obligations in the license condition will be in relation to reconciliation. So just to be clear, levelisation is the process by which the price cap sets prices for consumers which are closer than they are currently to, depending on the payment type, so that the prepayment premium is brought down, and this is offset somewhat by the direct debit charges. Reconciliation is the process by which funds are transferred between suppliers to make levelisation commercially practicable. So we are proposing to insert an obligation into the price cap condition. So that's for electricity, it'll be a new SLC 28AD39A, and for gas, it'll be SLC 28AD32A. And there's two fairly simple obligations there. The first is that you must submit to both Ofgem and RECCO verified data relevant for the scheme, and we are asking that when you do these data submissions, or we're requiring that when you do these data submissions, they're accompanied by sign off from a statutory director or other company officer to say that they have verified that these are, and taken all reasonable steps to ensure that these returns are accurate. And the second obligation is that you pay any charges which are calculated and notified to you by RECCO as the reconciliation operator under the scheme. Now, the reason that we have included this requirement for verified data is that our current design does not require suppliers to have specific separate audits for the data which they are putting into reconciliation. But we do recognise that significant sums of money will flow off the back of these data submissions. There's specifically a question in the consultation document about whether this is the appropriate approach, or whether we should be requiring specific audits, such as you've seen with government schemes such as the energy price guarantee. And I'll be very interested in your views on that. But as far as the Ofgem delivery position is, and how that's represented in the current stat call, this is it. So if you've got any questions relating to this or anything else, we've got a question session at the end. Thank you.
Thanks, Jonathan. Jenny, do you want to move us on to the next slide? I'll be quite brief, taking people through the scope of the changes. It hasn't changed a huge amount since the webinar we gave back in, was it September? So we'll call out the changes that we made to the legal text, but I think Jonathan's covered off the main bits. So I think the main thing to make you aware of is the fact that the change proposal has been raised. It's now gone through the initial impact assessments, etc. So that's now out for consultation. Obviously targeting the 1st of April to be in place in readiness for the new license applications that Jonathan's just touched upon. As we've called out previously, this is focusing very much on the levelisation of the standing charges, bringing prepayment meter customers and direct debit customers into line. It's not touching upon the elements of the unit rate levelisation for debt. That's covered off in the Ofgem consultation. So this will go live 1st of April. We don't yet know how long this aspect of the levelisation scheme will operate in isolation. Ofgem has indicated that phase 2 would be no earlier than 1st of October 2024, but it could be later, depending on the complexity of the build whether or not it's actually implemented, etc. So, so it's important to call that out. We do need, however, data from yourselves to complete the picture in terms of how many MPXNs are on standard credit terms, just to make sure we've got the entirety of the data, and that would affect calculation if that was missing, for instance, and we were and it wasn't part of the equation. So it is important that feeds in. We'll come on to that a little bit later when Ursula presents on the detail of the model. The other things to call out is we have tried to keep this as simple as possible. We've reused many of the principles that we've adopted and evolved through the evolution of the operation of the market stabilization charge. So there are some elements that would be familiar to you in terms of how we plan to validate which MPIDs are domestic or non-domestic, etc. If we can just move on from there, please, Jenny. So again, calling out the main points. So unlike the market stabilization charge, which came into effect in the middle of the month and then had to run for periods of weeks and a bundle of weeks after that, this will be much cleaner insofar as it will just be straightforward calendar months coming into effect on the 1st of April, first month ending at the end of April, as you'd expect. That does mean there'll be some variations in the calculations later on to account for leap years and all those kind of things, as you'd expect, but straightforward calendar month reporting. We will need the data to be submitted to us by the 15th calendar day of the month, but that will be an extract from your position as of noon on the 1st of the month. I'll come on to that again in a little moment. And we've provided 15 working days for suppliers to payment terms for the payment of those invoices, etc. Sorry, 10 working days. I'm reading the wrong line. In terms of the funds allocation, this will operate in the same as the MSC in that we don't have a slush fund, we don't have a kitty to pay this, so we can only pay out the monies that we receive. So if we get 95% of the monies in, we'll pay out 95% owed. There will be follow-up chases of the monies owed, etc., to try and make sure that all suppliers are kept whole. But we'll keep to the invoicing time period, so there won't be a kind of a delay while we're waiting on late periods, etc. The monies will be in and out in accordance with that invoicing timetable, and we will publish an invoicing timetable just to clarify when things are expected to be received by us, etc. Because this is about trying to facilitate cash flows for suppliers, essentially you've already incurred an awful lot of the costs, and the scheme is essentially preventing suppliers from recovering those costs in full from PPM customers. It's important that we make those suppliers whole as early as possible. So we will be keeping quite a strict adherence to the timetable. So if there are any late payments, those will be immediately escalated. We will use the similar sanctions that we have with the MSC insofar as we could, if necessary, prevent suppliers from registering new supply points. We would expect to make Ofgem aware of those late payments, etc. Again, if there are any disputes, we follow the same process as the MSC. We don't want to invent something specifically for this scheme. So it would be the standard RECO dispute resolution mechanism, i.e. you could raise any disputes to the Performance Assurance Board. And we've set a de minimis threshold on that, in that there's obviously time and efforts involved for all the PAB members to convene. So we expect there to be a fairly low de minimis threshold for that, which we've set to £1,000, exactly the same as the market stabilisation charge. If we can move on from that, please, Jenny. In terms of the submissions of the data, you'll have seen from the statutory consultation that went out last week that the obligation to submit data will not just be an obligation within the REC, but it'll be part and parcel of your licence obligations. And as I say, that will be to submit an extract of your portfolio as of the noon on the first calendar day of the month. You've then got until the 15th day of the calendar month to get that data to RECO. And that will be by 5 p.m. cut-off on the 15th of the month. And say if there are any late submissions, we would expect to escalate that, but we need to make sure that payment run, the calculations carries on in accordance with the timetable that has been set. So if the data is missing come the 5:05 on the 15th of the month, then we default to using the latest data that we have, which we'd expect to be whatever the submission from the previous month was. So everything should continue moving along, even if any given suppliers failed to submit their data on time, etc. You'll hear that there will be different calculations. Jonathan touched upon it already to the extent that this scheme, we'd expect there to be indicative levelisation charges that are published alongside the default tariff cap. That's generally about 6 weeks before the start of the tariff cap period. The aim is that we'll be using more up-to-date information submitted on a monthly basis, and therefore the invoices and the credit notes that you receive will reflect your position as of the first of the given the relevant month, as opposed to what you may have submitted to Ofgem for calculation of default tariff caps, which by that time would have been a few months previous. And the other thing to note is that we're doing this. It's an MPID level, so we're not taking it down to MPXN level, and that would again be reflected in the reporting data that you would receive at the back end of all of this. And move on from there, please, Jenny. So just to call out a few of the updates, I think the main one, apart from the changes to the nomenclature, we do have some changes to the interpretations schedule that we're proposing. We have a couple of new terms in there that we hadn't anticipated in September, which you might want to refer to. We're picking up the submission of these reports as part of the performance assurance reporting catalogue, etc., to tie that in with the usual reporting into RECCO. And I say there'll be procedures that allow these things to be escalated through to the PAB if necessary. The thing we do want to call out is there is a different approach to mutualisation of any bad debt under this scheme as compared to the MSC, whereas previously if there was a shortfall in the scheme, that kind of just stayed pretty much where it was. As I say, we received 95% of monies, we would pay out 95%. That could be the end of things if we didn't recover that additional 5%. With this, if there is a bad debt that needs to be crystallised, we'd expect to mutualise that across the whole of the domestic supplier base. And that's to ensure that the risk, if you like, doesn't fall solely upon those PPM heavy suppliers who would have been the recipients of the payments. That's seen as been a fairer and more equitable approach to bad debt in relation to this scheme. And again, I think that's part and parcel of the Ofgem policy. Moving on from there, I think that apart from the timetable, is all I was going to say on the scope of the changes themselves. The dates you can read for yourself. All of this is making sure that we can get the consultations out alongside each other. So you've hopefully seen that we've published, as I say, the consultation for R147. You can read that in tandem with the proposed changes to the legal text of your licenses as part of the statutory consultation. See how those two will work complementary to each other. We aim to have all of this completed so that Ofgem can also see the results of both consultations when it takes a final decision on whether or not to implement this scheme. Bearing in mind that decision is still to be made by the authority formally in January. All of that should hopefully be done and dusted by February, so we can give everyone sufficient notice as to when both the licence modifications and the code changes will come into effect. Although we know that it has to be 1st of April, so there isn't really an alternative date, but that will also give certainty in terms of the subsequent process that we'll go through in terms of testing and preparation for that 1st of April date. So unless there's any questions, which I'll pick up at the end of the presentation, that's all I was going to say, and I'll hand you over to Ursula.
Thanks, John. So go on to the next slide. So kind of what I want to start with is just kind of highlighting what the change that we made and kind of they can impact that high level timeline and the process that we've shared before. So the first point to call out is that the kind of the full end-to-end timeline is 9 weeks from when the data extract is expected to when payments are due to be made, and that's kind of taking into account a period where there may be multiple bank holidays and things included, which pushes the working days out. So that's kind of a 9-week data cut to payment of credits. Included in the overall process, we now have called out kind of some of those additional reporting elements to Ofgem. So that's including in the compliance and non-compliance of kind of supplying data, to both Ofgem and to RPA, as kind of was called out there by John. And also kind of the adjusted levelisation value, which will be calculated each month, as kind of highlighted by John. We'll be providing that to Ofgem and publishing that as well through RECO. It was just to point out that on receipt of data or an absence of data, you'd get a notification, or if there's any errors within the data, so that so on submission of that, kind of once it's gone through validation checks, you'd get a notification on that. Brings on to kind of, we want to give you some further information around the submission of data and how that will work. So this is some new information since last time. So I think we alluded to kind of a SharePoint location. So kind of our the view is that we would provide a supplier a SharePoint location for named individuals from each supplier. They would then go through multi-factor authentication to gain access to the location. Each MPID and SSE would have its own location to upload the data each month, and that's where we'd expect CSV files to be dropped into. We would then have an automatic ingestion from those data folders into our system, and through that they would go through the validation checks to make sure the data is in the correct format for the correct time period, and those sorts of validation checks would be performed. And that's where, if something fails, that we would then kind of provide that notification, as well as if there's non-submitted files, there'll be an alert then within 24 hours. And if we've only received incorrectly formatted or non-submissions, then that would be viewed as non-compliant with the data submission process. Okay. So this is just a recap of the format of the data. So this has been, I think, shared last time, and it's included in the consultation documents. So this hasn't really changed. So this would be for each MPID. So this is an example of electricity supplier for MPID AA. So that would be include the MPID, the region, and that would be kind of the region equivalent for the Ofgem region for the price caps. And that would be the count of meter points for each of the payment methods. So we've got the direct debit, prepayment meters we've split out the smart and traditional, and we're providing definitions of those. And that is, at the present, they're both treated the same, but it just allows flexibility in the future if there were to be anything different happens. And as John mentioned, we want to also provide that standard credit meter points as well, and that gives us then the full population of domestic meter points. We then would have the date applicable. This would be the first of the month for each one, and that allows us to kind of do that sense check. Date extracted and the data supplied, we'd expect in that data as well. Okay, so now I'm going to kind of take you through a bit of an illustrative example, and this is using made-up data, just to kind of provide that kind of a clear example. I'm going to keep it a bit simpler as we get through it, and only really refer to direct debit and prepayment standard charges, because they're the key ones included in the actual calculation at present. In this example, we're going to assume that there's only 4 suppliers across the whole market. For this, supplier A is kind of an average size supplier across all regions, with a kind of a portfolio similar to the market portfolio. Supplier B is a larger supplier with, again, a kind of a average spread of the types of payment. Supplier C is a prepayment heavy small supplier, and supplier D is a large supplier, and it's got mainly direct debit meter points. So that's just kind of to give a example portfolio that we'll use kind of through this calculation. If we go to the next page, so as we work through the example, we will zone in on a particular MPID. So it will be for electricity, and we'll only focus on one region, and so we'll kind of follow through those calculations. But when it's running, we'll have to then perform this for all regions, for all MPIDs and supplier short codes across all domestic suppliers. So this is just to give an example. So So I'll take you through. So the first step one in this is starting to calculate. So as we mentioned, we're going to have to recalculate the levelised standing charge for the month that we're working with, and that's because we will have the most up-to-date portfolio of payment methods. So steps 1 and 2 are to calculate that recalculate that standing charge. So the portfolio data, which often uses to produce the quarterly published dates, says out of date. And so we'll recalculate, so we have one that we can use that is in line with the current portfolio, and it means then that whenever all the calculations are made, it will net off the payments due in to the payments due out, and they will equal. Sorry, if we go back to step 1, so calculating expected standing charge totals across the latest portfolio figures. So we take multiply the number of meters for a payment type by the annual standing charge for that region and payment type, and that gets us the total expected charges to be received. And step 2 then, we take this total expected for all direct debits and prepayments and divide that by the total count of those meters to average out the value, and that will become the adjusted annual standing charge for direct debit and prepayment. So in this particular example, that's coming out at, for the Eastern region, it would come out as £168.91 for the year. I'll just say, kind of in all of these calculations, I've got kind of the colourful top layer is kind of the calculation, and beneath is the worked example. So you can kind of step that through in your own time as well. So step 3, so we take the adjusted annual standing charge, and we kind of take it away from the quarterly non-levelised annual standing charge that was provided by Ofgem, and this is to identify what that differential is on an annual basis, to kind of understand, okay, so what has been the allowed overpayment or underpayment through consumers. So that gives us for this, so direct debit differential here is £8.30, and the prepayment differential is £17.10 for the year. However, due to this being a monthly levelisation, we then need to calculate the rate per day. So if we go to step 4, so we need to kind of work out that calculation per day. So we divide that by the count of calendar days in the upcoming year from the non-levelised standing charge period. So that's kind of accounts for whether it's a leap year or non-leap year. In this example, we're working with for 2024, so there's a leap year included there, so it's 366 days. We also then at this point convert it to pence per day, just to allow kind of that greater level of granularity when working with 2 decimal places. So that gets us to the daily differential rate by region and payment method. This is then, as I mentioned at the start, we will have to then perform this calculation for both electricity and gas across each of the regions. So therefore, we will end up with a table, I think it should be on the next slide, of these that we will then share and publish with Ofgem and on the REC portal as well. So this kind of example for Eastern, suppliers were allowed to charge 2.27 pence more per day for electricity meter points. That was on direct debit tariff. So that's how much will need to be paid in for every direct debit meter point. And they're allowed to charge 4.67 pence less per day for electricity meter point on a prepayment tariff. So that's how much suppliers can expect to get from the scheme per prepayment meter point. So therefore, we take this data then. So we go to the next step, step 5. So to calculate by MPID and supply shortcode the net value expected to be owed to or due from this for suppliers. So we take the count of meters by region and the daily differentials we've just calculated for the region, and the number of calendar days in that particular month. And this is where John mentioned that there'll be some months with 30, some with 31, and then you've got your 28, 29 on the leap years. So we'll kind of take the number of days in a calendar month, and that will then get us what's the expected charges by MPID or SSE by region and payment method. And then we bring this back up to £2 as well at this point, instead of pence per day. So we calculate this across each region. For each MPID and supplier. And so we'll need to net this off. So for each region, there may be differences from region to region, so we'll need to net this off then. So if we go to the next step, so this is for a particular MPID, let's say there'll be pluses and negatives across the regions, and therefore we need to net that off. So this particular supplier, MPID AAAA, would owe 24,000 for this particular month across the 14 regions. So that's how we work through how to calculate how much is owed or how much needs to be paid in. At this point, the information then gets passed across to Echo to provide the invoice. I think we've got that on the next slide. Oh, so there's just a reference slide for you for all the kind of the calculation inputs. So we go to the next slide then. So we have example of invoice details. So you'd be provided with, okay, what's the description? So for each month and region and payment method, what was the quantity of meters that you provided us? What's the unit amount per month? And this is simply the daily differential times the number of calendar days, and then the amount for each of those line items, and then that will be netted off. So as you see, I've just included the first couple here, but that would go on and that'd be that 24,000 that is owed. In addition to receiving an invoice, you'd either receive an invoice or a credit advice statement if you're due money from the scheme. Would also provide the backing data, which has the full breakdown of this. So on the next slide, we've got an example of what that may look like. And this provides you that full visibility of for the MPID or the SSE, what the region was, the number of meter points that you told us there were, what date that was applicable on, so that's that kind of extract date, or that's the first of the month, what the differentials were calculated that we used, the calendar days that were used, and what are those amounts all broken down. So you've got that full visibility of the calculation, and that'll be provided at the same time as the invoices are sent as well. And the backing data will be shared into the SharePoint locations that you'd submitted your data to previously, to be available for you. Okay, so once the invoices are issued then, and the data sent out, and therefore the payments will be made. So as John mentioned, there's like 10 working days to make the payments. So once we receive the payments, we need to then carry out further reconciliation to allocate the correct amount to make payments to suppliers. So for this example, this will go back to kind of the 4 suppliers across the market that we'd identified before. And we've got kind of we've worked through the calculation, say, okay, so how much do they owe in or owed out from the scheme? And as we see at the bottom table there, that nets off to 0, because that's the reason why we had to recalculate those levelisation rates to make sure that money in equals money out. Okay, so then we'll go to the next, let's go summary slide, the next one. So in this example, we have a total payment in expected of 4.9 million. And what we want to say, so if there's a reason that a supplier does not pay within the window, we need to calculate how much payments have been received. So if supplier B does not pay, then the payments received will only be 89%. So therefore, we can only pay out 89% to suppliers A and C who are expecting to receive some money. So we just apply that calculation through. And that's kind of in line with the MSC as well, so kind of the money in equals money out. And we would then, if that payment that supplier B pays late, we would then pick that up in the next payment run and allocate that money, that difference out to this same month. So money does not get split across different months; it's allocated to the particular invoice cycle. And so therefore there may be multiple, if there's late payments happening regularly, there may be multiple payments for the same invoicing period. So that kind of covers off the kind of that overarching calculation end to end, from the data that's provided, how that works through the system, to how the invoices are created, and then how we take the payment information and allocate that out to make the payments at the end of it as well. So I hope that's been useful. We also want to give you a little bit of a brief update on the solution build and how that's going, and kind of on the timeline surrounding that. So this is just a very high level, so kind of where solution build is currently underway, and we're running this in sprints with a slight gap for the holiday season. And so we're expecting to complete the build in early February. We are doing solution testing alongside this, but we expect to start to undertake some user acceptance testing in February. And for that user acceptance testing, it would be great to have some suppliers involved with that as well, providing test data, and we will highlight later how you can put yourself forward for that. Otherwise, we'll reach out to some in January. We'll also be hoping to carry out some data submission testing in March. So this will be, once you provide your appropriate contacts, and we'll give them the ability to kind of test access to the system, check you can upload files, retrieve data from that to make sure we've got that working well ahead of go live on the 1st of April. And there'll also be a further webinar in March. Will be kind of in preparation for go live as well, I think as I mentioned before. So next steps then within the solution development. So I say kind of test submission. So we intend to carry out data submission testing in February, ahead of go live. So if you'd like to take part in that, drop us an email to inquiries@recmanager.co.uk. We will be needing SharePoint contact information. So as I mentioned at the start, for the SharePoint to work, we will have named individuals. So we will be reaching out in February to confirm who those named individuals are for access to SharePoint, to submit the data and access the backing information. And then on an ongoing basis, that needs to be maintained through contact with RECO. We will also be reaching out to confirm finance contact information, so the sending of invoices and credit advice statements. We'll do that in February 2024. And again, that needs to be maintained through contact with RECO to kind of update that on an ongoing basis. We will be confirming the domestic, non-domestic status declaration of MPIDs and SSEs. So we'll ask you to confirm your status in March to make sure we've got that the test eligibility and make sure we've got that latest status available. And then the final one there is on the data format. So there'll be a link provided to the final requirements, and that'll be found on the change proposal page on the REC portal, so that you've got that clear view of the format data that's expected in, and how to access that. Hopefully that's been useful. Again, any questions in the chat? Thank you.
Thank you, Ursula. I think it might be appropriate just to take a pause there. There's quite a lot of information in that phase. Give people the opportunity to submit any questions. There is the Q&A button at the top where you should be able to submit some questions. So should we take a pause? Jenny, have we had any questions so far?
We had some answers to Paul. I asked how we're finding the content so far, and mostly positive, which is good.
Good. The question and answer functionality will remain open right through to the end, so we'll carry on. This slide just reiterates that we will be requesting some information from suppliers after the Christmas period. We'll be requesting, as Ursula just outlined, we'll be requesting contact information for the contact point in suppliers for the access to the SharePoint access, which will be the submission of the data, and also the portal and the landing point for the management information produced by the solution. We'll also be asking suppliers to confirm the address for invoice submission. We do have invoice submission details for all suppliers currently, but we would just want to make sure that it will be submitted to the same part of your business. We'll also be asking suppliers to confirm bank account details in the event that they are a recipient and money is paid out from the scheme, that we will want the bank account details, sort code, name code, etc. to make those payments, and also any contact details for any matters of non-compliance, so e.g. non-submission of data. We'll also, as John mentioned very early in the presentation, confirm the invoice dates early in the new year as well, the invoicing cycle. So if we can go to the next slide. And as they say in presentations, you're always supposed to say things 3 times. So again, we're going to reiterate some of the dates, which we have said previously twice. The change proposal consultation on the direct close on 13th of December. Statutory consultation closes on the 2nd of January. So when you're sitting around on the 1st of January with not much to do, we can all write our consultation responses on that date. We've set a date of 9th of February for deadline for suppliers to confirm contact and financial information. So we'll be sending those out 9th of February. We'll be sending those out requests in the various forms in January, and we'll send those to the direct contract managers. We expect the final webinar to be done in early March, in week commencing the 11th of March. The system go live is planned for the 1st of April. And then the first invoice run will be in early May, following the first payments made out in early June to suppliers. I think that's the end of the presentation. Is that correct, Ginny? So we're very happy to take questions now. I'll give a few minutes for that.
Yep, so we've started to have a few questions through. Vivly says, apologies, I'm coming in a little late. When will these rates be published? Is it the same time as when the cap is published?
Jonathan, are you able to take that, please? Ginny, if you can leave John unmuted, that'd be great.
Yeah. So the answer to that is slightly complicated, but not very. So when the cap is published, the rates in the cap will be published within that calculation. We will also be doing a separate publication a couple of days later that just pulls out and highlights those rates specifically. So the answer is yes, but they'll be published twice.
Great, thank you. There was a follow-up. Are the rates the same for the quarter, but will change every quarter according to the cap change? The effect being that the resulting standing charge will be the same, and I suppose they apply to fixed rates customers as well.
So there's two questions there. One, no, the rates will not be the same throughout the quarter. So Ursula took you through the calculations by which the rates will vary slightly, and we do expect it to be slightly throughout the quarter. So we will publish what we're calling the base levelisation rates, which are set quarterly as part of the price cap, and then there will be a small percentage either way variation month on month, and that's just to account for the drift between payment types that we see during the month. But we've done some analysis, looked back at historical data, and seen that those drifts are not large, and that will have a minimal impact on the costs or support for any individual. Secondly, in terms of fixed term contracts, the proposal is that for any new fixes, the reconciliation charges would apply. And for fixes that were entered into prior to qualification date, and I will have to go and confirm what date that is, then we would ask you to exclude those from the data, and therefore the charges would not apply to them. Sorry, and I've just had it confirmed by my colleague that the qualification date for fixes will be any fix that was entered into before the date of our published decision, which should be in January or February next year, but we can confirm that closer to the time.
Great, thank you. We've had another question through. At the beginning of each year, you send Ofgem information on customer numbers, EAC and AQ, etc. Would this be something similar at the start of the year requested from suppliers for this process as a starting benchmark, since we may not be going down a levelisation audit route?
Yes, so currently you send out the or you respond to the tariff RFI on a quarterly basis. Now, we've deliberately structured our data request to you to be compatible with that tariff RFI, so it uses categories that you already know and understand. So the price cap will continue to be calculated in relation to that tariff RFI. And we will be requiring you to submit to RECO and Ofgem monthly data which is equivalent to a subset of that RFI, because that RFI goes into awful lots of details about how much you're actually charging people. We're not asking you that. We're just asking you to confirm the meter point counts for these the same payment types as is already set out in the tariff RFI.
Lindsay asks, there were instances of miscalculation within MSC. Will there be a clear process / SLAs to deal with this should it happen?
So I think John Dixon can probably speak best to this, but yes, there is a disputes process that would pick this up. John, is there anything you want to add?
Yeah, there is a disputes process. It might, Jenny, are we able to take the questioner off mute? Because I think that might be worth clarifying which sort of miscalculation they were referring to. So I know there are a couple of instances where the MSC values published by Ofgem had to be renewed. Were you referring to them or something that happened within the billing process on the RECO end of things?
Lindsay, I've taken you off mute if you'd like to clarify.
There we go. Can you hear me?
Yes.
Great. Yeah, so it was the Ofgem published MSC rates, which then had to be calculated. Yeah, so it was from an Ofgem side, not kind of more of a dispute on figures.
Okay. Yes. Yes. If there is an error or the reason to change these rates, then the process is for correcting or amending the price cap would kick in. Now, because unlike the MSC, the base levelisation rates are or will be, if subject to consultation, they part of the price cap. And to be clear as well, they will, that price cap publication will go through the normal publishing QA and consultation process.
Okay. Next question. Will customer figures for each region / payment method be available before the February price cap publication? The customer proportions will help us to predict the cost and levelisation.
So do you mean, well, answer this two ways. Obviously, you should have your own numbers as a supplier. I don't believe that we currently publish the aggregate payment type balance numbers, but I don't Yeah, I mean, we've published some within the consultation, but we don't publish them BAU. I don't see any reason why we couldn't, but I would suggest that if you'd like to raise that as a point in the response to the consultation, we can pick that up and we can look at doing that.
And the final question that I have at the moment is, why does the data submission template separate traditional PPM and smart PPM? I noticed in your examples that smart PPM happens to be 0, but is it necessary to separate?
So we've separated that for 2 reasons. One is because under the current tariff RFI, they are separated, and therefore, we wanted the categories to be categories of data that suppliers were used to using and have been using for a number of years, to hopefully remove the or reduce any implementation or compliance costs, because you're already extracting these data on a quarterly basis for Ofgem. Secondly, and this is what drove the split in the tariff RFI data, it future-proofs the system. If at any point Ofgem or government decides that the price cap or levelisation or reconciliation should be different for smart prepayment versus traditional prepayment, then we would be able to implement that without a system change. There are no current plans to do this, but we do know that it is an idea that people do float from time to time, and so, you know, that coupled with the as I say, the fact that suppliers are already providing this data breakdown in this format, we felt it was easier to design it at this stage.
We've had an additional question from Viv. So I'm a bit confused about the fixed rate situation, as the rates for Q2 24, Q3 24, Q4 24 and Q1 25 will be quite different depending on the cap. How can I recoup these from my fixed rates customers signing up in April? Will I have to predict those rates for the next 3 quarters so that I can price the fixed rate DD customers appropriately to cover the levelisation costs?
So the answer to this, and this is something that we are consulting on, and you know, your feedback on that would be welcome. But yes, we would expect suppliers to, as they do with all manner of other costs when they are pricing fixes, predict or make a reasonable prediction of what future costs may be. To be clear, the principal changes that will determine the level of costs between quarters will be the particular payment type mix, which doesn't vary that much. But yes, with fixes, as we're consulting on, the intention is that suppliers forecast these costs when they're pricing fixed term contracts.
Great, thank you. I can't see any other questions in the chat, so I will ask one last poll about how much you like the content of this meeting. So if you could answer that for us, that helps us to improve in the future. And then I'll move to the final slide. So thank you very much for attending. If you have any other questions, you can get in touch with inquiries@recmanager.co.uk. And we will be sending out emails in the next 24 hours with links to our website with a summary of this webinar, the recording and the slides. So yeah, you'll be able to check back in and look at those dates to make sure they're in your diary. But thank you very much.